Hello friends, welcome to Trading Income, and in this video we'll see how a trader started from 3 lakhs and reached to 1 crore from trading in just 2.5 years. So we'll see how is it possible, how is it possible, what can we learn, and we will discuss all these different points here: system trading, option buying, option selling, synthetic futures, drawdowns, compounding, and learnings. What can we learn from this trader? So this video is going to be super valuable. Stay till the end, take notes, and we can start. So before that, if you're new to this YouTube channel, subscribe to our YouTube channel because we keep on posting valuable videos related to trading. And turn on the notification and let's begin. So yes, it is possible, and it is possible via system trading. So what is system trading? In system trading, we follow the rules. There are fixed set of rules for entry, exit, stop loss, trailing. Everything is clear. There is a trading plan. We follow the trading plan. And opposite to this is discretionary trading. In discretionary trading, we trade according to our will, conviction, gut feeling. So this is opposite to that. This is system trading. So this trader did it via system trading. So the name of the trader is Madan Kumar. His Twitter handle is this, Madan_Kumar. You can check it out. We can learn profitable trading from this one, this trader. I also learned a lot of things from him. So what things are important here? One strategy he used. So in strategy, what are the different parts? First is the idea. After looking at the chart patterns, we get an idea. Then what we do is we backtest it. We backtest the idea. Then for several years, we backtest it. And after backtesting, if the results are good, then we get the confidence to implement it on real money. And then we can design our money management plan. And then we can execute. We should execute our plan, trading plan. And we should develop a resilience, psychological resilience for handling drawdowns, because drawdowns are an integral part of trading. And if we can handle drawdowns and develop a psychological resilience for that, then no one can stop us from becoming a profitable trader. So one strategy is enough to make this much amount of money from trading. So compounding is important here. If we keep on trading with one lot or one quantity or a very less quantity, even after 4 years, 5 years of trading, then we are not learning, then we are not growing in trading. So there is no point trading with small quantity. Even after having experience, if our system is performing better, then it's obvious, it's logical to compound. So this trader started with 3 lakh, and as his profits increased, he compounded also. So compounding is very much important to grow, to get this type of returns. And he was ready for 50% drawdown. So this is also important. If you can't take this drawdown, then it's okay for you. But select the drawdown which you can afford. Like some people are okay with 10% drawdown. So it's fine. It's nothing wrong with that. So you should select how much loss you can afford in one trade and how much drawdown your system gives. So these are several factors which are important. So time frame he used was 5 minutes. He backtested his strategy for 9+ years on Nifty futures data, implemented on Nifty at the money options, and number of trades per day was average 1, max 2. So generally it was just 1 trade per day. So regarding this, I would like to tell that if your system is giving many trades per day, more than 4 or 5 trades per day, then with time you will get exhausted. With time you'll be stressed out. So that will be there. So it's always better to have less number of trades per day so that you can survive for a long period of time without much burnout. So we should always have belief in law of large numbers, because if you backtest our strategy for large set of data, then it doesn't matter even if we have 10 losers in a row or 12 losers in a row, because eventually our system will be profitable. So we should have belief in law of large numbers. So this is the first part. Moving to the second one. So this trader started with 3 lakhs. And in the first phase, there are 3 phases here. In the first phase, he did option buying in monthly options, Nifty monthly options, not weekly. So using that, he went till 15 lakhs, from 3 lakhs to 15 lakhs. So what he had learned in this phase, we'll discuss. He did this in 10.5 months, from March 2019 to 16th January 2020. In 10.5 months, he made this return. Risk per trade initially was higher side, 4%. And one more thing, he started with 3 lakhs, but this amount, even if he lost this capital, it would not have affected his lifestyle. So he had no fear of losing this. But many people, they have fear. We have fear of losing our capital, and that stops us from growing. That stops us from being profitable in trading. So this fear of losing capital has to be reduced. So that's why the capital which we bring in trading, even if we lose that capital, it should not affect us. It should not bother us. So this thing we should keep in our mind. Win rate was 43%. So people go for, new traders, they go for a high win rate, like 80%, 90%. This accuracy they want. But with 43% accuracy, also, we can make huge returns. This trader has proved this point. But win rate alone is not sufficient. We have to consider the risk reward also, reward to risk. So reward to risk was 2.25. So win rate and risk to reward, they should be seen in combination. If you see just one thing, win rate or just risk reward, will not get a complete picture. So these two things should be seen in combination. And the option points he got for this phase 1 is 836 points. Option buying is more advantageous if trade time is less than 2 to 3 hours. If we are in the trade for, let's say, 2 to 3 hours, then option buying is more advantageous. This is what he thinks. This is what he thinks. And he was trading his stop loss very aggressively. So trading part was also there. This was the first phase from 3 lakh to 15 lakhs. After 15 lakhs, he started option selling. So we'll see the learnings here. This he did in 4 months, from January 20 to May 20. Win rate was 51%. So win rate has increased from 43 to 51% here in option selling. Risk reward slightly reduced, and option points is 626. So while option selling, his drawdown was less, in single digit only. So this thing is important. And one more thing, people keep on debating which is good or which is better. Option buying is better or option selling is better. So it depends on us. It depends on traders, what we are comfortable with, and how much risk can we take, how much drawdown can we take, what suits us, what suits our trading personality. So it depends on that. From option buying also we can make money, from option selling also we can make money, but we have to manage our risk. Money management has to be there, risk management has to be there, our psychology has to be proper. So these things are important, and it doesn't matter whether we do option buying or option selling, risk has to be managed every time. So this is the second phase. From 15 lakh to 26 lakhs, he did option selling. And the third phase, from 26 lakhs to 33 lakhs, he did synthetic futures. That is, if we get a buy trade in Nifty, then what we do is, at the money put we sell, and at the money call we buy. So option buying and option selling, both we are doing simultaneously in one direction. Okay, this is synthetic futures. Using this, he moved from 26 lakhs to 33 lakhs. This he had done in 1 month, from May 20 to June 20. Win rate is almost same, 50%. Reward to risk is 2.52, and option points is 369. So he moved to weekly options here. He started with monthly options in Nifty. And for this phase, he moved to weekly options because it has more liquidity, 4 to 10x more liquidity than monthly options, and slippage is also less. So it makes sense to move to weekly options in intraday. So there is a possibility of catching 1 to 3 big trades in a month, because in a month there are almost 20 to 21 trading days. So in that is an observation that 1 to 3 trending days can come. So in that, if we are able to capture more than 100 points in Nifty at the money options, then that can cover all our drawdowns, and that can bring us to all-time high, or that can take us out of drawdown. So this is one important point here noticed. Going to the next part, which is drawdowns. So drawdowns, trading is all about handling drawdowns. Because what is drawdown? Suppose our capital trading account has reached a new all-time high, and from that new to all-time high, the account is going down, say 10%. It went 10% from there. So say trading account went to 10 lakhs. From 10 lakhs, trading account fell to 9 lakhs. So that is 10% drawdown. So trading is all about handling drawdowns, because drawdowns, 95% of the time trader will be in drawdown. Okay. So how we handle the drawdown, that defines us as a trader. That defines us whether we'll make money from trading or not. So it also depends on risk per trade. How much risk I'm taking per trade. If I'm taking 1% risk per trade and my drawdown is 10%, then if I increase my risk to say 3% per trade, then it's obvious my drawdown percent will also increase to 30%. So it depends on us, how much drawdown can I take. If I'm okay with 10% drawdown, I should risk 1% per trade according to my system. This is just an example. So if I'm okay with 30% drawdown, then only I should think of taking more risk, which is 3% per trade. So drawdown is a factor of risk per trade, how much risk we are taking per trade. The same system can give me 30% drawdown if I'm risking 3% per trade. The same system can give me 10% drawdown if I'm risking 1% per trade, and the same system can give me 5% drawdown if I'm risking 0.5% per trade. So it depends on us how much risk I'm taking per trade. So compounding does not impact max drawdown. So we should go for compounding. If we want to grow our capital from trading, so compounding, we have to do compounding. Okay, and compounding does not impact max drawdown. So it's always better to go with compounding. So in Madan's case, his max drawdown was 34%, and number of losers in a row was 12. Moving to the next part, which is compounding. So before that, if you find this video valuable, so like this video, share it with your friends, and if you're still not subscribed, subscribe to this YouTube channel and turn on the notifications. So moving next part is compounding. So for compounding, what is important? For compounding, system has to be mechanical. If you're doing discretionary trading, it becomes very difficult to compound, to scale. It becomes very difficult because there are no fixed set of rules. One mistake can result in a big loss, and that big loss will take us months backwards in terms of drawdowns. So for compounding to work, system has to be mechanical, 100% mechanical. Develop psychological resilience. Like market plays with our mind, and our mind is like a monkey, it wanders. So our psychology has to be proper. Trading is a get rich slow scheme. We have to have patience, discipline, consistency, perseverance. So psychologically, we have to be strong. We have to control our emotions, and we have to develop psychological resilience. And for scaling, convert your system to 100% mechanical. So the thing is, Compounding is very difficult with discretionary trading. If you think that this is not true, try discretionary trading and try to do compounding with that. So it's always better to have a system 100% mechanical, and that way you can compound. So what can we learn from here? A trader went from 3 lakhs to 1 crore in 2.5 years using system trading, using just one strategy with 40 to 45% win rate. So it is possible, you can do it. So what can we learn from here? So now we'll see the learnings. Good trade. What is a good trade? A good trade is a trade where you followed your plan. If you followed your plan and made a loss, that is a good trade. But if you have not followed your plan and made a profit, that is a recipe for disaster. That way you will make a big loss very soon. So good trade is a trade where you followed your plan. Stick to a simple plan. Plan has to be simple, because if the plan is complex, it becomes difficult for execution. If the plan is simple, it becomes easy to implement, to execute. So the plan should be simple. And after making the plan, just stick with it. Act dumb in front of markets, because market is supreme, price is God. Our mind is like a monkey, it wanders. So we should act dumb in front of markets and just follow our rules. When the market is open, just follow the rules. Act dumb in front of markets. Have belief in law of large numbers, because law of large numbers works. It's not about just one trade, 5 trades, 10 trades. It's about 100 trades, 500 trades, 1000 trades. So after 500 trades, 1000 trades, you will see that your system is working. But if you decide on the basis of 5 trades, if you see back-to-back 5 losses and you quit your system, then you will never be a profitable trader. So have belief in law of large numbers. Your maximum losing streak is coming to you. So be ready for that. People think that in the backtest, if your maximum losers in a row is 10, then we think that, okay, it will not come. But when it comes, we are not ready. We are not prepared. So you should be ready to face your maximum losing streak anytime, because it is coming to you. Increase your execution efficiency above 90%, because it's all about execution. Trading strategy is just 20% of the part. Rest 80% is psychology and execution. Execution has to be proper. Increase your execution efficiency above 90%. Don't miss any trade, because the system, I don't know whether tomorrow I will be profitable or not. Tomorrow. So I don't know my winners, which day I will win, which day I will lose, I don't know. So it's always better to follow your trading plan every day and don't miss any trade. Get better at the trading process. Just follow the process, enjoy the process, and the results will follow. If you are into trading for money, money will run away from you. But if you are into money, if you are into trading and if you follow the process, enjoy the process, money is a byproduct. It will come to you. No point jumping system. System hopping, no use. If your current system is giving you 3 loss back to back, and we doubt our system. So have trust in your system, because you have designed it, you have built it. So have trust in your system that it will work. Give it time to work, and don't quit your system until you get the drawdown. Suppose your backtest has shown 30% drawdown. So until it crosses 30% drawdown, don't change your system. There is no point jumping systems. System hopping will take you nowhere. Create a mechanical system. Again, the same thing, create mechanical system. So what are the steps? Idea is there, then you backtest it, then money management, then execution, and then develop psychological resilience. You don't need high accuracy to make big profits. You don't need high accuracy to make big profits. This trader, Madan Kumar, had accuracy of just 40%. So 40% is enough to make big profits. His reward to risk was 2.4, 2.2. So this thing. So risk reward is proper. If risk reward is proper, then low win rate, is also taken care of. So win rate and risk reward, they both should be seen in combination. So belief that high accuracy is needed to make big profits is wrong. One trade per day is best for intraday. Because see what happens if you take more trades per day, then you will burn out. You will burn out with time. In 3 months, 6 months, 1 year, you will burn out. You'll be stressed out. Tension will be there. So screen time more will be there. Your back will pain. There will be many issues. Health issues will be there. So it's always better to have less trades per day, because if you want to survive for a long time, one trade per day is best for intraday. And this is all for this video. These are the learnings from this video. If you follow these learnings, you can also make a good amount of money from trading, from system trading. So if you want to learn from Madan Kumar, then this is YouTube channel, Markets Madan. You can search on YouTube. This is website, marketswithmadan.com. And his Twitter handle is @Madan_Kumar. You can check him out. His posts are goldmine for trading, and we can learn a lot related to profitable trading if you just follow him and follow his posts. So now we'll quickly see his YouTube channel, his journal, and see what we can learn from there. So quickly we'll see that. This is his okay. Markets with Madan. This is his website. Okay. So he's a system trader, trading Indian stock markets for the last 16 plus years. And here he has explained everything. So you can check this out. This is the YouTube channel having few videos, but they are very much valuable. You can check them out. This is his Twitter handle, Madan_Kumar. And coming back to here. So coming to our mind map. So if you want to learn more, then I'm coming up with a live masterclass related to trading, where we'll discuss how can you stop your losses, how can you design your own system so that you can also start your system trading. So if you're interested, you can click on the link in the comment box. This is the link, and you can register for the next live masterclass. And if you want to get this mind map, then you can get this mind map on my Telegram channel, Trading Income 2. This is my Telegram channel. You can join this channel to get this mind map. And thank you all for staying till here. And I wish you all profitable trading. And till now, if you're not subscribed to this channel, subscribe it. Turn on the notifications. If you found this video useful, type useful in the comment box and share it with your friends. See you in the next video. Till then, happy trading.